Hello and welcome to the channel. Hope you guys are having a fantastic day. Today we're going to talk about the SPY levels that I have that I've been playing options on, and I have a couple of levels here that I want to go through with you guys. And of course, this is going to be more of an informational video for you guys, and not a suggestion or anything that I would recommend you guys to do. But of course, if you find some facts here that you can relate to, and of course, you could always do whatever you want to do with your money. But again, this is going to be a quick analysis and quick levels that I have been having on these on the SPY on a daily chart. Of course, you can go to 5-minute chart, 30-minute chart, 1-hour chart, but I go from top to bottom. I go from daily to bottom and see how the things are behaving. So let's look at the daily chart, right? It is confirmed double bottom. How double bottom works is that you have a confirmed double bottom, and when the market price break that resistance that it created from the W, right, in that case, then it's a bullish trend. It's going up. So if it's going up, for example, on Monday, Monday's off because of Memorial Day tomorrow. So if it goes up on Tuesday, it could potentially go up to $419, right? If it crosses that $419, it could potentially go up to $425. Now, the EMA, exponential moving average, it's way the candles are way past the exponential 13 period, and it's almost hitting the 48 period, which means that it is on a upward momentum. All right, RSI, which is the relative strength index, is above 50, which means it was down to 30s, 36. Last few weeks, and then it started shifting from last 3 to 4 days, and now it's above 50, right? Which means it's a true indication that it is sort of moving up. And also the MACD, moving average convergence divergence, is also sort of coming up, which means, look, again, as I said earlier, right, like these double bottoms are great, the patterns are great, but if you have a negative catalyst that comes out, and that could throw away all the technicals. Okay, these catalysts, the supply and demand, are the greatest of all, right? If you have a catalyst that comes out and tells you that, okay, something president announced that is not great for the market, or something that happened, with a war that's happening, there will be a repercussion of that, right? People will take the money out of the market, and whatever patterns you were looking at may not hold true, right? So that's why a lot of people fail to understand that when you play the market, right, you cannot put your expectation on the market. Okay, you cannot say, I'm gonna make $100 and market is gonna help you make the $100. What you need to really do is you got to look at the market and understand how can you make money off of it, not the other way around. Market is not favoring you, is not favoring anybody. It's just numbers coming up with bars, etc., and you can do your technicals. So the point I'm trying to make is, when you log in on Tuesday and you see how the charts are moving, and you already confirmed that there's a double bottom here and it is moving toward the analogy that you see, then you go ahead and move with the trade. But you got to have your stop losses accordingly, right? You cannot diamond hand everything that you put your money in. A lot of people, I've seen a lot of friends and family, they put money in there and they just diamond hand it. They think, yeah, it will come around. When you do options, you lose every penny off that option. Option loses money every day, right? So if you're not selling your option the same day, for example, the next day it will be a little lesser of a value than it was on a particular day you bought it at, right? So ATR, let's go back to the different indicators. The ATR is the average true range, which means the stock moves around $10 in a given day. So which means that this ETF can potentially, let's say if everything is green and it's moving up, it could potentially go up to $425, okay? In a given day, it moves around $10, okay? Now, RSI, MACD, EMA, pointing to the stock having a good day on Tuesday as well, okay? Now, nothing is guaranteed. Of course, nobody can predict the future. This is what the technicals are saying. And let's look at the options. So 419, let me come up 419 here quickly. All right, it's going to be here in a second. 419, 1,429 open interest, which means that these are how many folks are thinking about getting that contract. 420, of course, this is June 3rd, so which means it's next Friday. Expiration, 420, 8,000 open interest. 422, 9,000. 425, 2,000. So everything is about relatively, people are considering these stocks. I mean, the 422 and 420 seems like a very heavy, and 418 seems very heavy as well. But I don't have 418. Of course, 418, basically it is around, because what happened is sometimes these levels, when you draw them up, 418, 419 is $1 difference. It makes a huge difference on an option. But, again, if there's a little bit of a mismatch here and there, and I see a lot of open interest on an amount that is dollar lesser than what I think, I usually try to go with the open interest, which is, a little greater, because I always feel that, that will give me a better results that it has in the past as well. But look, at the end of the day, the point I'm trying to make is that there is a confirmed double bottom here. The stock is looking to be bullish on Tuesday. And, with the options, if you're getting in an option, if a lot of people get greedy and they, don't want to leave money on the table. Don't be that person. If you get some money out of the market, I would say take it, come back to it. Markets open up every day. Opportunity is, literally every day. Maybe you're not a day trader. Maybe you cannot trade every day. But look, start from small, come up big, but do not always think about people. A lot of people talk to me, my family and friends, and say, oh, I wish I would have stayed. I left the money on the table. Don't worry about that. Market opens every day. Keep moving forward, and put money in, get it out, put it back in, get it out. If you want to be a constant winner, you got to play with the market, and you got to take profit when it becomes available. Don't worry about the money on the table part. And that will lead you to a very good positive trade. It happened to me a couple of times. I was very confident that it's going to go up. And suddenly when I thought, maybe one more minute I could wait on this. And there you go, the shift. The death candles came in, the red bars came in, and then took the profit away. And I end up with my stop loss, which was literally the same price I bought the stock at. So don't be that guy. Always take your profit. And as far as the levels are concerned, I think it looking pretty bullish. But again, look, nobody could predict the future, okay? You could pretty much have the way the candle closed on Tuesday. It's a full bar. It's a full candle. Very bullish, very bullish. But again, always have your stop losses. Don't just go in and think, yeah, definitely is a bullish, and then we're just going to go in and just, pretty much diamond hand this whole thing for that day. So always have your stop losses. Always work with the market. Do not go with your expectation. Always work with the market, what is given you at that point of time, and then get into the trade and put your stop losses accordingly. Hope you guys like this video. Hope you like these levels. Let me know if you guys have any suggestions on anything that I missed in the comment section, and I'll definitely reply to that. So talk to you guys later.